Hello and welcome to Credit Shift News and Update. I'm Paul Sweeney, co-founder and chief strategy officer here at Webio, and today I am joined by our COO at Webio, Delia Jones, and we will be exploring recent news, stories, events, and trends in the credit industry. Okay, so let's dive into the details. Firstly, the UK's Finance Household Review for the first quarter of 2023 shows a significant decrease in mortgage lending. Despite this, house prices continue to rise, with a 0.5% increase reported by Halifax's Housing Price Index. This increase, likely driven by a shortage in supply rather than affordability measures, has pushed the average house price to £283,615, over £40,000 higher than pre-pandemic levels. Interestingly, there's been a 3% drop in deposit levels this quarter. This could indicate that the savings buffer built up during the pandemic is starting to diminish, although overall savings are still relatively high. The review advises monitoring overdraft debt closely, as an increase in this area could signal escalating financial stress among households. It's important to note that savings are not evenly distributed. Lower income households are less likely to have significant savings. In line with this, a report from Shelter Organisation highlights a concerning trend. A third of private renters could not afford even 1 month's rent if they lost their job due to inadequate savings. Moving to spending habits, more than a quarter of UK adults are expected to use buy now, pay later, known as BNPL schemes, for Christmas expenses, with this figure rising to over half among parents with young children. A survey from Citizens Advice found that 11% of respondents have used buy now, pay later schemes for groceries, a figure that increased to 35% among regular users of these services. Citizens Advice has seen a 67% increase in people seeking help for buy now, pay later related debts over the past year. Of the 2,156 adults surveyed, 28% plan to use BNPL for holiday spending, jumping to 56% among parents with young children. Alarmingly, 21% of buy now, pay later users have missed or made late payments in the last year, with 10% facing enforcement actions. Additionally, about a third of these users have taken on more debt to cover buy now, pay later installments. Dame Claire Moriarty, Chief Executive of Citizens Advice, emphasises the urgent need for regulation in this area. She warns that the increasing reliance on buy now, pay later for additional Christmas expenses could push already financially strained households over the edge. I guess it's stay tuned as we continue to explore these critical trends. Delia, these are, I guess, in the round kind of worrying figures about the uptake. I don't know if you've seen anything with our clients of increased activity this time of year?
Yeah, so it's definitely worrying, and it's completely understandable. Obviously, the pressures are on for everybody with Christmas, and young children, they all want what they want. The Christmas lists get longer. Also, they're just looking at the private renters that you mentioned, sort of rent going up. I think it's up about 22% on last year.
Yeah.
That on people that didn't have a month's rent in the bank. There's not that additional capacity there. So it's worrying times for everyone. And I guess it's just about how can we best help. So both from personal experience and from looking at the conversations that are happening across the Webio platform, you can see this isn't a case of people trying to avoid payment. There's just no money there.
Yeah, we see that. Across all the conversations in the industry that we have, the focus of helping people not just pay their bills, but get out of debt. It's a change of focus that's happened over a couple of years. And I keep on seeing this reflected back in the conversations we have at a professional level in the industry. It's really a sea change. We're going to come back to some of those issues later on, but I'm going to move on to the next section here on AI and recent legislation. There's been a Court of Justice of the EU, known as CJEU. They've made a landmark ruling this year on the EU's General Data Protection Regulation, or GDPR. It states that decision-making processes using personal data through scoring systems are unlawful. This ruling is particularly relevant for social security and credit agencies, as it clarifies that GDPR prohibits subjecting individuals to automated decision-making that significantly impacts them. Now, I'm going to just take a break down this one for a second. There's a lot more detail on it, but I think we've seen this one coming for a while, in that when you're using any form of AI, you've got to have like a deep view on what your data's been trained on, how your models work, having explainable models, and ultimately who and how decisions get made with that. I know we've had a lot of, and you've had a lot of experience with that, Delia. This won't surprise you that much, I don't think.
Yeah, and it's great actually to see the conversation now becoming so front and center in everyone's mind, because AI is going to impact us all. And what we don't want to do is build in and amplify the prejudices that are already there in society. And that is the biggest risk. We see that happening with the AI that's already there. So from our perspective at Webio, it's definitely something that we've been building into our thinking for the last 2-3 years, around how can we explain the AI, how can we evidence it, and ultimately how can we make sure that it's treating customers fairly and that they can understand why they're being treated in the way that they are.
I think that's just, I mean, it's great for us, obviously, to have spent that time and be ready for this. But I think this is going to be one that people are going to bang up against, and there's going to be arguments against. And I've already had a couple of conversations in the industry with people who say that this, how do you change the whole credit scoring industry if this is the way they're using data? Or I think this will bump up against some customer duty rules as well, around how you interact with customers and ask them for information. But yeah, it's this was well signposted for a couple of years that this was going to be the way things were going to happen. I'd be surprised if, let's just say, reputable companies were caught on the back foot with AI that didn't allow you to do this.
I think as well as an industry, it's an industry that's well used to regulation. It's well used to meeting compliance requirements. So if any industry is ready for this, then the sort of credit collections payments industries will be all over it.
That's a great point. I mean, there's other industries where the culture just will be different, and we'll find it maybe harder to adjust. The case that was brought about this decision involved Germany's largest private credit agency, I hope I pronounced this right, Schufa, SCHUFA, and the National Family Allowance Fund in France. The court's decision limits the use of personal data in scoring algorithms, and according to some experts, negates the legitimate interest justification that organizations previously used for scoring. So the ruling also casts doubt on the legality of similar algorithms used in public services. So it might be the case that you have to evidence the impact it has. Like, is it a severe impact on people? Is it a broad impact socially? And maybe those two things are very prevalent in public services, and therefore they have a higher kind of level of responsibility in that regard. Moving on, I think the implications are clear that this is going to be about public services, particularly broadly hit by that. But it's also a week when we saw the EU's AI Act passed. Again, this is something that brings larger AI platforms under regulatory scrutiny, requiring them to disclose their operational mechanisms, the data they are trained on, their approach to automate decisions. And this again has been something that has been prepared for. But I think people don't really understand that if you're using a very broad language model and you're trying to get it to do things, that these language models also have to be publishing some of their tests up front. They're going to have to fall under some much more regulation than they did before. Let's see how it pans out. But no doubt the EU thought it was very, very important, and they really got the legislation in place a lot faster than we would have previously expected. I don't know, Delia, I'm pouncing this question on you, but any reflections on that at all?
So hopefully the EU legislation this time will be legislation that can sort of be applicable with the technology as the technology grows, because the technology is moving so fast. Legislation takes time. So what we need is legislation that will enable that technology to be developed. This is a really important conversation that all of us need to be engaged in, all of us need to be having, and we need to be sort of lobbying our MPs and ensuring that the protections are in place. Just because we can doesn't always mean we should. So we need to make sure that the AI we're sort of adopting and bringing in is well thought out and doing what we want it to do. So I think it's definitely, hopefully this legislation will enable things to progress in a much more positive way for the people that will be impacted.
Yeah, I think that we're seeing the EU really moving fast on this. When you think about what happened with social platforms, without having to point out that it's Facebook and Twitter of old, now X. They're two American platforms. They fall under American rules. They're under American jurisdiction. And the EU had little or no power about what happens in those platforms and really found it difficult to impose some rules on them. And they've also found that, and we saw the threat to democracy that happened from that. And I think they've also seen from the rise of the hyperscaling platforms like Google and Amazon that the American platforms really took over too quickly. So there's definite thrust of trying to support European language models, European companies pushing forward. I get a sense that there's more than a bit of it, like a bit of protectionism involved in this too. But I think there's more here. I'm looking at some of the American conversations about this, and they're faced with similar problems of how to regulate, and then how to regulate in such a way that the industry is able to compete and innovate. And I think that depending on which side of the political spectrum you're on, if you're much more free market orientated, you really want to let it rip, as Boris would say, and just, the market will take care of it. And on the other side, you may be over-regulated so it stifles and dies. Obviously, we're looking for that balance in the middle.
It's quite exciting, though, isn't it, to have, so you're right about America sort of really owning the space when it comes to the social platforms, but it's quite exciting to imagine what a European AI, a European AI-led environment would look like, because the European mindset is very different to the American one. It's a different way of thinking. It's a different balance of power between the consumer and the enterprise. So, yeah, I'm quite excited. I think it's a great sign. So let's see what happens.
It's definitely going to be an interesting 12 months, if not 24 months. And it is like we we say this kind of every week maybe, but this is a platform shift. Like, this is a big, big shift from the way technology was before, how we work. Like, this is a significant change. Thank you for that. And I think you're like ideally placed to have that conversation given your role here at Webio too. So thank you for that. On to the third part of our podcast, where we pick out a report and delve into it and maybe explore some of its consequences, and you can add it to your own strategic radar. This week, it's a report called Two Nations, The State of Poverty in the UK. It was published by the Centre for Social Justice. It is a comprehensive report spanning over 300 pages, and it revisits the key drivers of poverty identified by the Centre 20 years ago and examines their current state. The headline really is, there's been an acceleration of poverty drivers during the pandemic. The report reveals that the pandemic has significantly exacerbated the impact of the 5 driving forces of poverty: family breakdown, addiction, worklessness, serious personal debt, and education failure. Notably, there has been a staggering 700% increase in calls to domestic abuse helplines. Mental health issues among young people have worsened, with the rate rising from 1 in 9 to 1 in 6. Severe school absence has jumped by 134%, and there's an 86% increase in people seeking help for addictions. This is against some positive progress in the longer term. Despite these alarming statistics, and they are alarming, there have been some positive developments. Unemployment rates have fallen, literacy levels among young people have improved, and the overall crime rates have decreased. However, the nature of unemployment and employment has shifted towards more part-time, insecure jobs. Wages are stagnating, And this is leading to over 2 million people relying on welfare to supplement their income. The mental health and economic activity says that the most disadvantaged individuals perceive their mental health as one of their biggest barriers, a concern that ranks fifth among the general public. The number of people economically inactive due to long-term sickness has risen to over 2.6 million people in the UK, an increase of nearly 500,000 since the COVID-19 pandemic. Over half of these individuals suffer from depression, anxiety, or other mental health issues. The cost of poor housing and low skills. The financial impact of poor housing quality on the state is significant, costing 1.4 billion annually. However, the combined cost of low literacy and numeracy skills is even more staggering, amounting to over 100 billion a year, a figure that's also likely to be reflected in the cost of crime for people who fall into a life of crime. Conversations with professionals in the credit and collections industry have revealed to me that over half of the people seeking help with economic vulnerability are already employed. Additionally, it's been stated that digital interactions with debt collections are becoming increasingly important to all players in the business. They help de-escalate situations as machines, unlike humans, do not judge or make people feel like failures when they're interacted with, if your conversations or interactions are designed correctly. I think that was a lot of information in a short time there, Delia, but I think it's... I personally was taken back by the depth of the impact that COVID seems to have made on people here. I know we were getting a lot of information during the pandemic about the need to stay indoors, to work from home, etc. But obviously, for people in disadvantaged areas, this really exasperated the situation.
It did, and in the UK specifically, COVID came on the back of austerity, so that there's not a lot of support there. So I guess you can see why people are struggling. One of the figures you said there, Paul, which was sort of really eye-opening, is the amount of people that are employed and still not able to sort of survive and thrive.
Yeah.
That is, it's a really challenging environment there for people. And I think that's, just something really that needs to make us all stop and sort of check what should be done to change that. Because if you are employed, you should be able, if society is working, you should be able to sort of survive and thrive.
I think some of the details now, I got halfway through the report. It's a 300-page report, but I think some of the other things that I picked out of that were that if you are like at that balance of trying to get back to work, there's a fear that if you come off of some of the social welfare benefits and the job doesn't work out, or the job disappears because it's an unstable part-time job in some way, then you don't want to go through that period of trying to get enrolled again and qualified again for Social Security. So I think they're trying to get to a stage where you can kind of move from Social Security to employment, and then give a kind of guarantee to them that if the job isn't there in a month's time, that you can come back in on the same Social Security. And I think that would give people the first step to getting into the next area of employment. And the other thing was that it actually, according to the report, I have to say, according to the report, that when people are looking at the cost advantages of either going back to work or trying to maybe get one of their children diagnosed with ADHD or with anxiety or some other registered issue, that's more beneficial to them at home because of the extra support you get. So there's really that age-old kind of poverty trap, and that we're holding people in the one position there.
And there could be, I think, with the diagnosis is it's always difficult because it's very easy to label people on the lower end of the incomes as, okay, you're trying to play the system. There's elements of that all across the social spectrum of playing the system. I suppose it's difficult, isn't it? And as you say, one of the things with going back to work is childcare, and the cost of childcare is very prohibitive. my kids are older now, thankfully, but when they were at nursery, it would be £900, I think, a month for the oldest one. So it's a significant chunk of your salary. It's almost, for a lot of people, that doesn't make sense. It doesn't add up to send your child to a private nursery. And nurseries without state funding are obviously going to be in that difficult situation because you need to pay someone less than you earn. So the nursery staff aren't paid well either. So it's a very, it's a tricky one to solve, definitely.
Yeah, I remember for myself, that you have your mortgage and you think that that's going to be your biggest cost. You close behind it when we came from Dublin to Limerick here was our telecoms bill. Like in the year 2000, 2001, our telecoms costs were nearly as big as our mortgage. And then our kids came along, and then their creche costs were high again. It's a tough squeeze for people with young kids. It's and trying to do it on your own, then that's another level of pressure. And then trying to do it on your own in a disadvantaged area, then that's a whole other level of pressure. And I think that when we do try and stay cognizant of the lives that people live, and we say that trying to discover the circumstances that somebody's in and try to understand those circumstances and help them plot a way through it. Life is very complicated. Like, life is very interconnected, and we might be designing a form or trying to elicit information from people. And it just, I think, is this kind of report keeps front and center that people live complicated lives. They have a lot on their plates. They have a lot of pressures. And it's not a simple matter of, I just forgot to pay. Sometimes there's a lot going on. And it's if technology can help with that process, I think that's great. But we shouldn't really try and think that technology is going to solve people's problems. It's a much bigger issue than that. Well, I think that's us covered for this week. We have a quick update on trends and economic and technical trends in the credit shift. But we thought that this week, maybe with these kind of reports coming out, it was just a time to step back again and just look at the fact that people are living in fairly difficult circumstances. It's important that we understand it and empathize with it and try and get as deep an understanding as we can. Even when we're doing strategic reviews and technology, the social, technology, economic impact is an important part of our planning process. If you're interested in these reports, do check out our show notes where we have links to the sources for all our stories and the reports that we make reference to. Delia, it was special to have you on today, and fortuitous given your background and all these compliance and AI issues that you're here with us. And I know you feel passionately about these issues too. So hopefully this won't be the last time you are on this show.
Excellent. Thanks, Paul.
Thank you very much. Take care, folks, and join us again next week for the Credit Shift. Keep your eye open for a new Credit Shift interview, which should be dropping soon. And if we don't see you again before Christmas, have a safe Christmas and enjoy it. Thank you very much.